So again, all of this, these shenanigans will come out from, in some cases, the exchange press department, where, as we know, Goldman Sachs, in essence, bought out the New York Stock Exchange. And yes, they do have a PR division. They're quite active, and you can imagine if the New York Stock Exchange releases something, that the wires are going to pick it up very, very quickly. And this is pretty common. This whole cycle of what I call talking it up, keeping people involved, keeping the juices flowing. Let me see if I can find this quickly. I had one more example, hopefully, to give you. And no, okay. So the thing to remember is the news is going to reflect really on a base level more of the conspiratorial view of things, which is the funds, the market makers, the specialists are all going to be working towards making sure people stay fully invested. And that will apply in the currency markets as well. You'll hear rumors and trader talk. If you have the Trade the News application, you'll start to hear, or rather you'll start to see headlines go by, trader rumor that it's called a sovereign name is another way of saying, like the Federal Reserve or the Bank of England, some kind of government is in buying a currency. You'll see that bantied about quite often. So remember, as we come into these very important news announcements, we have to remember to take the news with a grain of salt, use it as an observation only. If there is a news announcement, like for example, coming into the beginning of November here, where we were looking for these news announcements to play out, one of the things that the Federal Reserve talked about was that they saw an increase in basically the downside risk for the U.S. economy. It was a huge reversal in tone, a huge change in the overall statement, where the Fed basically said, hey, all we're concerned about is growth. We're trying to avoid a recession, which is really the opposite of the fiscal policy that was around back in the 80s when Volcker was around. He threw us headlong into a recession because he wanted to clean up the excesses in the credit market. Obviously, Bernanke and whomever is telling him what to do has other plans. So their concern is going to be to somehow stimulate the economy so it doesn't go into a recession, the so-called soft landing. I have yet to see a soft landing, so I'm not sure exactly how they plan to pull it off this time. Obviously, it's through lower rates and a very loose fiscal policy. So, as we came into the events in early November, you saw a lot of things hitting the market. What we have to remember is that right now we are in a very unique time in the marketplace. We have the de facto reserve currency at all-time lows, in many cases against currencies. We have extreme credit issues where we actually had an outright bank failure in the UK. Of course, the news media was very, very quick to stop calling it that. It wasn't a bank failure. They just needed to be, quote, bailed out. So, last time I looked, when a bank had to be bailed out, that means it's bankrupt. Okay, if you have to bail a company out, they're insolvent. So the media was quick to start using terms like bailed out. It faded fairly quickly from the radar screen, 3 or 4 days worth of this UK bank being talked up. And then it was pretty much over.